Hey, good afternoon, guys. This is another subscribers only stream, right? So I've had a few questions about obviously this couple of drawings that I got on the chart, right? Um, Paul actually shared quite an interesting video earlier, right? And I know if you're kind of new to us, you might not fully grasp how some of these things connect, right? Which is why I strongly advise you go through the educational content, kind of step by step. You go through that kind of basic into the more advanced and then follow kind of through to the interesting lessons, right? But again, kind of watch this video. I think it's only 10, 11 minutes long, but it actually kind of, I guess, fits a few of the gaps that I see without needing these types of indicators, right? Because when you stick indicators on the chart, right, all it's doing is telling you information that technically the chart is already kind of produced. It's already kind of in the chart built in some way, shape, or form, right? Now, with lots of experience, it's easy to highlight these things, and you can easily say, look, when a price does this kind of sideways type transaction, you're going to have a lot of volume there. So if you come and look at the swing moves, if we looked at a swing from, let's put something like this on. If we looked at a swing, from there to there, right? You know that if we were to view this literally from the top to the bottom, right, the volume's more likely to be in and around this region. Right? If we look at the volume from the top down, we've got a couple of pockets, a couple of key areas. Now, from the top being there, we've got all of this, right? We got all of this sideways, and then we come down to the base, right? So, in theory, if you were to draw a profile on something from there to there, you would expect relatively high volume there, relatively high volume there, right? And then obviously a gap in volume there to there, right? So if we put something like your fixed range volume profile on and you do to the swing, right? You've got exactly that. You've got the gap in the middle, right? And you've got obviously high volume, high volume. Clearly, the volume point of control up high, right? So the chart is already kind of highlighted. Now, obviously, using things like the fixed range volume, there's nothing wrong with it. Of course, you can put it on, and especially if you're newer to this, it makes probably more sense to put it on. But for me, I'm just used to kind of not having it right now. Obviously, for a long time, you just get used to these things the more and more experience that you build, right? Now, again, similar things for spotting gaps and fair value gaps and imbalances and so on, right? They become obvious. Things that become less obvious are ones that are not so prominent kind of visually on the chart, right? When you start seeing all of these things there, right? This is kind of how you build the story, the bias, you're starting to put that, kind of the pieces together, right? Now, when the price rallies up, one of the things that was mentioned in this video was obviously volume, right? So the first one was the volume, the second one was the CVD, right? Now, again, the CVD, if you look at what we had built, this is what Peter Hammer was building, we've actually got the footprint indicator, right? And the footprint indicator is actually part and parcel of this CVD indicator range, right? So again, click on this channel in the member section and you're able to access the CBD indicators as a whole, right? So, what I liked about the video Paul shared this morning, right, was this was very simple. It was a very good way in terms of explaining how these things work, but without, I guess, maybe realizing these things are actually all connected, right? So when you stick in, fixed range volume, all you're looking for is if you go back one or two major ranges, right? So let's go even further. Let's go from this swing low to a swing high. Let's go swing high down to, let's say, the first swing low, right? But I'm also going to do the second swing low as a bigger range, right? Then you've got obviously this swing low to this swing high, right? And I'm going to use a smaller one on the high to the low, right? Back there. So what you've now got is a couple of key areas and a couple of areas of interest, right? that you can literally look out and say, well, okay, what have we got? We got, this one here being the point of control, but it's technically been used and used and used again. It's been used obviously back there for this move over here, right? We've obviously got a new one, right? So the reality is this kind of key level, if I was to just use a box, this key level, because we've got this range here coming all the way through to there, this range becomes pretty massive, right? And pretty strong. Now, ultimately, as we're coming from below, technically this is regarded as resistance rather than support, right? So we know we've got an awful lot of interest to the downside, right? Which is why these things are there. Now, if you look at the next part of this, right, the CVD is the volume. The volume is, up or down in theory, right? The CVD is basically the difference between the buying and the selling volume, right? So you've got the volume profile, as in the volume on the x-axis, which I'll put this on as well, right? And then you've got the CVD, which is basically, let's do CVD, and I'm going to put this on as the oscillator, right? So what we're actually seeing, right, from this particular point is when the volume is increasing and the price is going up, everything's going in the same direction. Everything's kind of in your favor, right? So you'd expect the price to carry on up, right? All I've done right now, and this is part of where these orange squiggles have come from on the charts, why, where. If you look at the levels that I've identified, right, I'm slightly off on my POC on this little white level, right? But it's good enough for me for what I'm looking for. I've identified this high volume node there based on this here, look, right? So these are key areas for me. Everything else is the gap in between. Then obviously we've got a couple of other things. We've got the master pattern sitting in there in terms of the consolidation sideways, right? This obviously is where the POC levels from prior swings come in. So I'm expecting that range. When I then start looking at what we've actually done, what we're actually doing, right? We've then got this level here being the last major swing high. I'm going to draw this all the way across. So when I then looked at the levels that we were at where I posted this, back last week, first post, right? I'm seeing all this without any of this information. And I'm saying, well, we've got a last swing. We're in kind of a master pattern consolidation. We're in a point of control high resistance level. Right? We technically sweep above, but the sweep above was based on, low momentum, low volume, right? I'm not sure if this was obviously, yeah, this was over the weekend, look, right? So we've got, for example, the weekend range happening from, let's go back to Saturday, Friday. So, from Friday through to Monday. Let's put this Monday, Sunday, Monday there. Right, so it's Monday range. Let's put that down. So Sunday to Monday, I'll make that a different color. Let's make that white and I'll make it brighter. Okay, so you can see low volume, right? Price obviously trying to move itself up during that period, right? And then obviously we get this kind of taper off in the volume. So again, come back and watch this other video, right? This one here. And all you're seeing is we're playing in a range after the sweep. So one of the things that I said, I think it was in the musing channel. Let's come back up. Let's find the musing channel, right? Was I said about sweep it once, sweep it twice, right? And I made a bit of a joke about this. The reason that you can see these things from, from space, these things are actually miles and miles and miles away. Sweep it once and sweep it again, right? Is all of these things combined. We're at the resistance level. We've swept the higher price there, but failed to continue through with the bias. Right? We got low volume in terms of activity. CVD is still negative. Right? So again, you can put all of these things together. Right? When you drop down smaller time frame, I'm only on an hour time frame at the moment, right? One of the things that you can also then look at is, I talk a lot about the drop and the retest route. We've got this ascending move. So just think what causes that ascending type move into a key area. This is where price is tired. We've kind of rallied on up into an area where there's an awful lot of interest to the downside, right? And we haven't gone and broke through impulsively to come back and retest the top side to go again, right? So the chances are it's going to want to come down. Now, if you look at where we come down to, if I only need to look at the prior swing, this is again the prior swing low, so I'm going to come from the very low all the way up to the high. Okay, right? Look at the profile that we've got created there. We've got no volume underneath this key area of support. So if the price breaks down through, this is the drop, the retest, right? Then what you have is the potential for a deeper drop. But then what you've got is the same as this up here being the resistance. You've now got an awful lot of support all the way around there. Right? So in theory, if you're looking for a move into a key level, potential sweep of liquidity, to drop to retest, which is the support of the underside, to then drop down into the range, right? So let's just assume that we drop from here. I'm not saying we do, right? This is just where you're looking at, right? If we were to drop from there, right, we'd come down to the low. We'd assume that this is the swing high, right? Look at the range that that gives us, right? You couldn't make this up, okay? This is why, for me, I'm not interested in obviously the corrective moves and whether this is an A or a B or a C. You know, I really couldn't care less. The real value for me is knowing that for us to drop down, we need to induce new positions long. To induce these new positions long, you need to make it look like this is a big fancy move on the smaller time frames, because a lot of these, retail traders are not trading on a daily time frame, weekly time frame. These guys are looking at 4 hour time frame for a 10-year forecast, right? This obviously is the benefit. So when you put all these pieces together, this is my mindset, this is my thinking, this is the logic, right? Now, obviously, of course, you can be wrong. This could break out and a little bit of news comes through and all of a sudden it's skyrocketed. But if I'm looking at probabilities, which is the whole point, the probabilities of this is that we grind up a little bit more, we induce new traders long, we sweep potential short positions that were in early. Right? Now, we don't have to come up and above here, right? We just need to cause maximum pain, right? Once that starts to sell off from there, or exiting their positions, because technically they're already short, then obviously we got the opportunity that new traders will be long, old traders will exit shorts. That will then give CM Composite Man the the ideal kind of position for the perfect A, B, C type of move down into the liquidity zone, being that 1.618 extension, right? So when I look at a chart, this is how I'm analyzing, right? This is the kind of the mindset, this is the thought process, this is the kind of step by step. But obviously, over a long period of time, you could look at these charts and say to yourself, what is going on inside this move? Clear as day, these gaps equals low volume. This move equals a lot of volume. This equals a lot of volume. This then move going sideways equals a lot of volume. You've got little pockets, right? So when you draw that profile, like we've just had on, I'll put it back on just to show. When you draw these profiles on, they're pretty obvious to see where those areas of interest are. Big volume, little pocket, obviously big spike there, right? So that area there is a pretty interesting area because it's very small in terms of the candle, width. There's only 4 or 5 candles in this consolidation, but the volume was massive, right? Hence the reason for why it dropped down to this range, back to retest the underside of the range, which is technically all of this area of interest, and then obviously the fall through no volume, no interest into into the zone, right? So when I break it down, that's what I'm looking for. Like I said, I do forget sometimes in terms of putting the volume profile on because you're just so used to working this out kind of in your own mind rather than having to draw it on the chart. Right? So what I like to do is I like to keep the charts pretty clean 9 times out of 10. And that ultimately is why I tend to only put a couple of lines on because without really looking or without really thinking, the obvious play is there. We are ascending, volume technically will be decreasing on that ascending move. We've obviously got key levels and everything else then supports it. So, go back to watch that video back in the visitor section, right? Watch this video, and then all of what I just showed you hopefully will start to make a bit more sense again, right? But obviously, all of these things are interconnected, whether it's the fair value gaps equals obviously imbalance. The imbalance is the low volume nodes within the volume profile tool, volume in terms of the x-axis volume, it's just showing kind of momentum up or down. And again, you can see those inside the candle story. So go back and watch that interesting lessons inside the candle. And then I think just identifying volume, you'll start to see when you get a consolidation, it's pretty obvious that lots of things are happening there. When you get a massive impulsive move, it's pretty obvious that there's not really a lot of things happening there. Hence, no volume, lots of volume, right? So I'm going to leave it like that for today. Any questions, feel free, obviously, to ask, probably in the technical question section. But obviously, guys, we are trying to encourage you to ask these questions. It's the only way you're really going to learn. This. If you don't quite understand it, don't be embarrassed. Don't be concerned that you can't ask this. I'd rather answer the questions kind of openly to the group so that the group learns rather than answering a bunch of, kind of DMs and it's only kind of one person learning at the time. I think the more everyone is helping each other in some way, shape, or form, the better, obviously, the community, the better the group. And I think the better everybody kind of starts to progress. So that's kind of the ideal goal for what we're trying to achieve here. All right. Anyway, see you on the next one. Thanks for watching, guys. See you soon.